Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update. Today we got personal spending, personal income, and PCE. I think it was hotter than expected. We were watching for at least flat from the previous one. So spending 0.6, it came higher than expected, 0.8, and month over month of the personal income came also. We were expecting 0.3, a slight decrease, but we saw 0.7, hotter than expected. So PCE finally decreasing year over year a little bit, but flat month over month. And this is not good for the market. Initial jobless claims, it came lower than before, so we were expecting higher than before, and again bad news for the market. Remember, we want jobless claims to be higher, we want labor market to start getting cooler, and continuing jobless claims, this was higher than the previous one. We were expecting a little bit higher and it came higher than expected, so that's good news at least. And core PCE came lower than expected and month over month, and a little bit lower than the previous one on the year over year. So mixed sentiment in regards of the economic data. And at 10, finally, we got the ISM manufacturing, PMI, new orders, unemployment, and everything came lower than before. This is supposed to be good news for the market, but sadly, we are not seeing much momentum to the upside, continuing yesterday's big move. So we got the news of the PCE at 8:30. At first, we tried to reclaim, as you can see here, the last week low, this blue dot line. We rejected it, we consolidated, and at the open we started again. We rejected both the last week low and this 12,140 daily level. As you can see here, this is the daily level that we got on the rejection on the 15th of November, and we are right now trying to push again for this level and breaking 12,000, consolidating 12,000, and looks like we are not looking quite good. At least volume is not too high on this pullback. I still think this is still bullish sentiment and bullish price action, even though we got this at 10, the PMI, that I personally think is good, but I don't know why markets are not liking that. I don't know if there's anything else in the market. Apple is quite weak on the day, and also Microsoft, so perhaps people is just taking profits. We will be consolidating around these 12,000 right now, just below 12,000 right now. We are basically trying to hold these levels, and as long as we hold those, if we check the 2-hour time frame, as long as we hold this pivot, I think we are good to go. So it's important that after a good move, we consolidate and we hold new levels, and this is what we are doing. Look at this bottoming tail. This is nice bullish candle. So as long as we hold this 11,927, 40, something like that, 12,000 would be ideal. But remember, price action needs to be healthy. We need to obviously take profits. A lot of people, I think, is taking profits after yesterday's move, and open interest in Nasdaq futures and S&P futures were higher, and I think a lot of people is building positions to the upside. So let's just be patient and wait for the moves on a healthy manner. And right now, I'm a bit disappointed about this sell-off. I think PMI, ISM manufacturing PMI, I don't know why they are taking this kind of approach to the bearish side. But regarding the rest, everything looks more or less good to go and to continue to the upside. Dollar, if we check the 2-hour, dollar after yesterday is continuing selling off through this 200 EMA. That's the thing that I wanted to see for continuation to the downside. So look at this. This is the converging 200 EMA and 200 SMA, two of the most important high-profile moving averages that are in the daily and people are watching. So dollar is confirming weakness, and also yields after Jerome Powell said yesterday that we could start seeing less interest rate hikes in December. Yields are basically pulling back. This is the 2-year pulling back strongly after yesterday's speech, and this is an important level. If we reject this 45 EMA, I think there's a lot of empty space below until we see the 4% for the 2-year, and the 10-year is even pulling back more. Stronger move to the downside, minus 1% on the day for the 10-year, and this is something good. So dollar is weakening, also yields, and let's check the inverted yield curves, because this is something that I've been sharing in this channel for a long time. This is the 10-year minus the 2-year. This is one of the short-term positions. Remember, let's do the watermark. The US 10-year, this US 10-year is what markets control, and US 2-year yield is what Fed can control. So the difference between those two is the first inverted yield curve that big investors are watching. And right now, look at this. This dot line is the 0%, is the spot in which we are already inverted. So we've been inverted since July, and we've been consolidating and now still breaking down. So something is sick in the economy. Something is not good. So let's be patient, let's be conservative and slowly build the sentiment, because even though the inflation and the interest rate hikes may be decreasing in December, something is still sick in the economy, and a lot of investors say that this is not good. This is the first inverted yield curve. Then we have the 10-year minus the 3-month, even shorter time frame. And look at this. This is quite bad. So we didn't have any kind of big inversion since the great financial crisis on 2019. Right now, look at this. We are even deeper inverted. So this is something a lot of people is just missing, ignoring. They don't want to see this, or they don't even know. So you guys have this information, and this is not looking good. And let's talk about the shorter term of the 2-year minus the 3-month. So if we check this one, let me check, because I think 2-year minus the US 3-month, your 3-month. So it's okay. It's okay. It's just bond yields. Okay. So look at this. We are again starting. Right now, we are not yet inverted, but right now we are starting to see that after yesterday. So look at this. Yesterday crossed the 0%, and we didn't see this since, again, the great financial crisis. So we were shopping around, and then we got pandemic, and then we started the stimulus until right now. So more and more, a lot of yields are being inverted. So remember that, watch out for that, because this in the future may show in the media, in the news, and you already can see that. So check out these yields, check out this information in this channel, because I think there's something sketchy, there's something sick in the economy that we must see sooner than later, perhaps. So let's go back to crude oil. So crude oil is catching a lot of momentum to the upside. I think this is being manipulated by OPEC plus countries. So we are, after all, I think I can remove these trend lines. Also this one, I will keep this one. But we are seeing price being manipulated to the upside after this big momentum candle. There's a lot of buyers buying 75, and I think it was quite clear. Quite clear. So crude oil is building momentum. And what about net gas? Natural gas is rejecting this 7.7, basically 8 higher pricing, and it's again rejecting higher pricing and trying to hold the 200 moving averages. A lot of volatility in energy. If we check the sector fund, XLE is just trying sideways, chopping around here, maybe preparing the future to this big breakout. This big breakout is one of the biggest breakouts that we can see. This level is back from 2014. So energy is building momentum. So watch out for this, because as you know, crude oil is one of the big one of the bigger ones that can impact inflation in the future. So let's go back to the Nasdaq and let's see how we are pricing. Still, price action is choppy. It's not looking bullish, but again, we are holding these levels, and as long as we remain higher at these levels, we can look for higher moves throughout the week and through 12,100, last week low, and all those levels that we can start to see. Let's check the daily on the S&Ps. S&Ps is crossing these 200 moving average already, and it's right at that critical spot that we didn't break this year. So this is very important spot, and maybe we need a little bit of push from economic data. So let's check tomorrow what we can see. Tomorrow, Friday, we get unemployment and non-farm payrolls. We are expecting more or less flat for unemployment, less than the previous one. Unemployment, I think, will push the markets, and non-farm payrolls, we are expecting a high decrease in payrolls. So payrolls affect the money that people tend to spend, so it affects consumer spending and consumer discretionary funds. So with lower payrolls and higher unemployment, I think Fed will be quite happy, and we can see markets pushing way higher, perhaps these levels in the S&P for the breakout tomorrow, and also for the Nasdaq we can see some nice push to break 12,140. That is last week high, and also this big pivot that got rejected at mid-November. So watch out for that. I think we have a plan for the rest of the day and for tomorrow, the end of the week. And as always, thank you for your time. If you have any questions, you can comment down below, and I will try to respond to all of your questions or your doubts. If you found this video useful, please remember to smash the like button and subscribe to the channel to receive notifications when I upload these new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time. And remember that the trading day is not over yet. Discipline and risk management are key for success. Stay safe, everyone, and let's see if we can hold these levels and finish strong the week. For tomorrow, unemployment and non-farm payrolls, and let's see later with the market recap at market close. Stay safe, everyone.